Now here is Ticky Fullerton on Your Money.
Hello there, I'm Ticky Fullerton, every night bringing you a full hour of the very best in business coverage across the nation and internationally, especially where business and politics meet. Well, coming up, is this man an acceptable face of capitalism? Is he the acceptable face of banking? What can we learn from Commonwealth Bank CEO Matt Comyn, the man tasked with fixing the culture as he faces a Royal Commission grilling? Live with Chief Reporter Leo Shanahan in a moment, who's been down at the Royal Commission all day. Australia's first fixed income active ETF launched today by Legg Mason and Beta shares on the ASX. Its target? Self-managed super to reduce the risk of a market downturn that might collapse retirement nest eggs. Andy Sowerby, CEO of Legg Mason, joins me from the exchange. And APEC wraps up without the usual communique as the US and China trade blows over China's status at the WTO. Wilson's Tracy McNaughton returns to the show to give us her latest views on the implications for trade and the economy. Well, let's get straight to it. The chief executive of CBA, Matt Comyn, has accepted the bank did not learn from past mistakes and suffered from cultural problems that did not prioritise customers over financial outcomes. Mr Comyn, who heads up Australia's largest bank and company, was the first CEO to face the Royal Commission that was announced a year ago. Under questioning from counsel assisting Rowena Orr QC, Mr Comyn said the bank had not learnt from the past that led to a series of scandals among its financial planners, its former insurance arm, as well as charging fees for no service and the AUSTRAC transaction monitoring failures, which led to that $700 million fine. Well, Your Money's chief business reporter, Leo Shanahan, was there for the entire proceedings today. For more on what went down, he joins me live now at the desk. Leo, how did he go, Matt Comyn?
All things considered, I think a good performance.
Yeah.
He understood it. He got it. And I think he demonstrated he got it in his language to the Commission. There weren't weasel words.
Was what Rowena wanted rather than just apologies.
Yeah. Now, there was mea culpas at the beginning around the range of scandals. Of course, you know, we've got financial planning going back all those years. We've got insurance scandals. We've got related financial planning scandals in fees for no service. You've got AUSTRAC. You've got these credit card insurance issues. But I think what Matt Comyn showed from the outset is an ability, a capacity to answer questions directly and take responsibility where necessary and answer questions as they related to others as frankly as he could. Now, when he was asked about what went wrong, we have had this reoccurring term of culture to the point where I think it lost a bit of meaning. He sought to explain what he meant by that. And look, have a look at Matt Comyn's opening statement really to the Royal Commission today when he talked about the failures in culture at the CBA.
Well, a culture of us not learning from issues of misconduct in the past. What has become clear, and certainly I tried to highlight some of those commonalities during my witness statement, when you look alongside the various case studies that I was asked to prepare as part of my witness statement. As you said, there are a number of recurring themes, and ultimately that's why I say we get into a period of ongoing remediation without actually fundamentally understanding the root cause in each of those matters and making demonstrable steps to ensure that they don't reoccur.
Leo, interesting that when he talks to culture, he is quite prescriptive because, you know, I say again and again, I did an interview. If I did one, I did 3 or 4 interviews with his predecessor, Ian Narev, and asked him about culture or bad apples. And time again, he said to me, there's no cultural problem. Well, now we have Matt Comyn not only admitting, yes, there was a problem with culture, but actually being quite prescriptive about what that problem was.
Yes, and he spoke of the financial scandals, the financial advice scandals, and said, look, this notion that it was a few rogue advisors is frankly wrong.
Yes.
That's not the way it was. It was a lot more problematic.
And going right back to, you know, the noughties.
Yeah, and went to a distinct misunderstanding of people in their role in the bank, and which led to, say, fees for no service, but also a series of other scandals. I mean, he said the bank, this is some of his points, has not consistently prioritised customers' interests. CBA has been complacent and lacked appreciation of non-financial risk. Problematic relationship with regulators, and as well as being insular and not sufficiently listening to external voices. So it was pretty, I think, damning stuff from their own CEO, but I don't think he had a great deal of choice at this point other than to accept those kind of the findings of the APRA report.
And he was the CEO of the retail bank.
He was, and a bit more on that in a moment. But, you know, there was evidence that his own auditor had basically said, yes, the APRA report was correct, and I'd been saying this for a while. But they moved on to remuneration, and that was an interesting discussion, talking about the remuneration of frontline bank tellers. Should they be getting these short-term bonuses? And the fact that he's on the record with real scepticism about it. Also on the record with the way mortgage brokers are paid. In fact, he wanted to move to a one-off payment, customer pays model that would have gotten rid of the trailing commissions, because he thought these mortgage brokers being overpaid. But let's have a look at what he said on remuneration.
And this is in particular, this example is the one that we grappled with for the vast majority of our customer-facing people in branches where the variable incentive, as this makes clear, is 10%, which in round dollars, I think the average payment is something like $1,500. Is it necessary, given all of those elements are both a source of motivation? And I go on, I think, in the paper to also talk about, it may not be in this paper, but there's one that looks like it, or an email that I sent to the Chief Executive Officer, a number of things that we need to manage to ensure that we get good customer outcomes, not just the incentive design, which is all around target setting, performance management routines, culture, because people, this point around playing their part in a winning team, I've seen examples where people have done the wrong thing for no financial incentive, but they wanted to play their part. So that it's this sort of combination, and this is my point. At times I feel that there's too much focus on formal incentives, and the holistic motivation overall is very important.
Leo, was there a bit of tension there between Matt Comyn and Ian Narev, do you think? I
think there was definitely evidence of differing approaches to both this issue with remuneration, but more awkwardly for Matt Comyn, this issue of the credit card insurance, the mortgage insurance, these products that have been banned and actually were brought up early on in the Royal Commission. There's evidence that he said to Narev as far back as, I believe, 2014, that I've got issues as head of the retail bank with these products being hawked by us. I'm not a fan of it, and Narev chose to disagree. Well, take a look at some of his concerns about these insurance products.
You held concerns about the sale of consumer credit card products for by CBA for some time.
Yes, my concerns varied from the value of the product, the eligibility criteria, which, as I think you know, becomes an issue later. Whether we were meeting a genuine need, the claim payout ratio, a number of elements of the product, and whether they provide appropriate value and benefits for customers. I certainly had concerns about their value.
I see.
And my principal concern was how they compared with others, and as I said, various steps were taken over time to improve the value of those products.
Were you concerned that customers didn't understand the products?
Yes. Yes, and be prepared for Matt Comyn to be questioned on that again tomorrow, this issue specifically when he was in charge. But look, we're likely to move on to Catherine Livingstone tomorrow,
at some stage,
about
yes.
halfway through the day, I'd imagine.
Yeah, the CBA chair. All right, Leo Shanahan, well done. Thank you very much. And for a live stream of the Royal Commission proceedings this week and the latest commentary, head to www.yourmoney.com.au/royal. Moving to markets now, and fixed income is a growing attraction for Australia's superannuants, particularly those nearing retirement. Well, as we've heard from the ASFA Super Conference just last week, recent instability in global markets, largely due to trade wars abroad and the onslaught of the Banking Royal Commission here locally, has those close to pension phase turning to fixed income assets to safeguard their nest eggs. The trend is hot on the heels of moves in the US, with the Nasdaq reporting over $7 billion was invested in US-listed fixed income ETFs during the first week of November. Well, the very first actively managed fixed income ETF was launched here today on the ASX, a collaboration between trillion-dollar fund manager Legg Mason and local ETF behemoth BetaShares. Legg Mason Australia CEO Andy Sarby happened to be in Sydney for a launch. I spoke to him about the rise of fixed income and, as a side note, what the third largest shareholder of Fairfax makes of the newly approved merger with Nine Entertainment. Andy Sowerby, great to see you there, and a pretty exciting day for you guys.
Yep, very exciting day, Ticky. Thanks for having us on the programme this morning.
What is it exactly that you will be offering now, retail and institutional investors?
So today marks the launch of the very first active ETF that focused on domestic fixed income markets. We're launching in partnership with a firm called BetaShares, the BetaShares Legg Mason Australia Bond Fund, under the ASX code BNDS.
And how big is this market likely to be, do you think?
So that's a good question, Ticky. We definitely see this being a fast expanding market for both retail and institutional investors. We've done a lot of work understanding the market dynamics and really understanding where investors are positioned. And particularly as you look at direct investors, SMSFs, and indeed some advised investors, Australian investors tend to be very underweight in fixed income markets. And that actually has been a good decision. Obviously, equities have run very well post the GFC. Cash rates have been nominally high, but both of those factors are coming under pressure, and we see a need for greater diversification in client portfolios.
So really interesting, coming back from the As for the Super conference in Adelaide last week, and one of the issues raised was exactly this, that we've had this 10 years since the GFC, but of course if there is a major correction and you happen to be unfortunately timing your retirement just when a fall hits, you can lose a huge amount of the value of your super. So there are lots of questions around how you manage the risk at that time in your life. Is that the sort of space you're looking at?
Absolutely. I think if you look at super investment, SMSFs in particular, they tend to be heavily biased to a few large cap equity names, property and cash. And undoubtedly in our mind, and indeed most market specialists would say, you need to be more diversified than that, and adding a well-managed fixed income portfolio to your portfolio will help you achieve that. And with BNDS launching today, we're providing access to proven expertise in that regard. So
an ETF is a basket of something. Exactly what sort of a fixed income basket are you offering?
That's a great question. So we're offering access, so under our affiliate manager, Western Asset, I should say that Legg Mason is an active specialist, global in nature. We manage $1 trillion on behalf of institutions and investors all around the world. One of our specialist firms is a firm called Western Asset Management, and they are one of the world leaders in active fixed income investing. There's a team within Western Asset based in Australia, led by Anthony Kirkham. And what they specialise on is investing across the market in fixed income securities here. And they invest in government, semi-government, supranational and credit and corporate bond markets to generate a very diversified portfolio of securities which can help investors add diversification to a broad portfolio.
So that ETF, the ETF you're launching now, that's a domestic debt ETF, yeah?
Correct, and it mirrors a long-tenured and very successful unlisted managed fund managed by Western Asset, which has been in existence for over 20 years. It's highly regarded by the research houses and indeed is a multi-award winner, having picked up all the major awards for domestic fixed income capabilities in 2018.
Yeah. So obviously, from a risk point of view, this is very, very low risk. What about the returns? What sort of returns are you going to be expecting, given this climate of low interest rates, but potentially edging up?
Yeah, that's again a good question. So undoubtedly, interest rates are low. We're in a lower interest rate, lower inflation environment. And basically, for a vehicle like this, what we're looking to generate is a yield of around about 3% and some capital return over time through constructive management of the portfolio. So very much a defensive part of your portfolio, designed to bring down risk and to provide diversification to a broader portfolio and really add that insurance should, as you've already mentioned, Ticky, we see some kind of broader equity market correction in the future.
And Andy, I mean, you say it's a broad portfolio, and I'm sure it is within the context of the domestic bond market, but of course it's a very small corporate bond market we've got here. There's been various calls from the likes of Anthony Pratt, and most recently last week Mike Baird was talking about this again down in Adelaide, about the idea of matching superannuation up with business and opening up markets. Do you see the corporate bond market taking off in any way?
We certainly see it growing. We've seen a lot of growth, albeit from a low base, as you rightly recognise. And, you know, as one of the major investors in the local fixed income market, Legg Mason and our affiliate Western Asset lobby extensively for continued expansion and growth in the market. We expect that to continue, and we think that capital markets can provide a good source of funding to businesses as they look to grow and expand. I'm
just wondering why the corporate bond market in Australia is so relatively small. Is it that when borrowers try to go to the market, the terms aren't as good as they could get on the international front? Why is it?
I think it's a market which is growing. I would start off by that. I think secondly, capital markets here continue to grow. I think, you know, a fund like BNDS being launched is really to create a vehicle which can help that money become available to lend into credit markets. So I think it's just a market that's maturing, and we think that market continues to mature, but we think all market participants have got to help for that market to expand and help SMEs and small businesses create the funding that they need, and of course the larger enterprises, in the most efficient and effective way.
Yep, all right. Well, finally, I can't let you go before asking, because of course your firm, I think, owns over 6% in Fairfax. Now, we had the cat, Anthony Catalano, being rumoured to try and stop the takeover deal, and now we hear that actually the deal has gone through, that Nine will in fact take over Fairfax. Presumably you guys are pretty happy about that?
I probably need to check in the office on that one, Ticky, but you're right. Martin Currie Investment Management are one of the bigger investors in that deal. They've been quite open in terms of their views. What I would just say is we're long-term investors. We engage with our companies, and the team at Martin Currie, I'm sure, will be reflecting on the announcement this morning and thinking what's best for portfolios going forward.
All right. Well, good to hear. Thank you, Andy Salisbury, very much for telling us all about your ETF.
It's a pleasure. Good to speak to you, Ticky. Thank you for your time.
After the break, more royalty down under. The Duke of York, Prince Andrew, is in town for Pitch at Palace. We'll get more details next from your money reporter, Camille Bianchi.
You're watching Ticky on Your Money. Now, back to Ticky.
Welcome. Well, the royal visits to Australia continue, and while last month it was about Invictus with Harry and Meghan and Bub-to-be, this week is all about business and startups in particular, with Pitch at Palace. Pitch at Palace 2.0, actually, the second year for the event in Australia, which was started by Prince Andrew, the Duke of York, back in 2014 in Britain, and which has now gone global. Today is the first of a series of gatherings around Australia, where His Royal Highness will listen to 3-minute pitches from entrepreneurs. Last year's Australian winner actually went on to win the global prize, so we've got high expectations. Well, for more, your money reporter Camille Bianchi joins me live on the ground at the Sydney Opera House. Well, Camille, I was there for the start of it. You've gone through all of it, but tell us a little bit about what the Prince's vision is.
Well, it was a typically colourful visit for the Duke of York today, and it was a long day. We were with him for most of it. So this morning he stopped into fish burners, he talked about ecosystems, and what I would gauge from his conversations with entrepreneurs there is that he really wants to change the startup culture in Australia and incentivise entrepreneurship here. So we'll hear a little bit of some of the commentary he had.
We are not a competition. We are not sharks. We are not dragons. We are a pod of dolphins. Because dolphins work collaboratively in order for everybody to succeed. And what I am about is to see if we can make more of these growing businesses successful. This is about creating opportunities within the business ecosystem to new businesses and to growing businesses. And as I think that we grow ourselves, we will be looking more and more at how we support the scaling businesses. And we ourselves will be starting to look at how we can invest in our alumni businesses ourselves.
Camille, what I thought was interesting about it, you say colourful, it was really interesting. It reminded me of the dot-coms during 2000. Everybody was actually in black who was presenting. I don't know whether that was what was supposed to be happening. But of course we had former Prime Minister Malcolm Turnbull there. Lucy Turnbull was emceeing. And the audience was a really interesting audience. And the whole point was that audience was participating. So not necessarily throwing money at these businesses, but throwing connection and opportunity.
Yeah, I really love that element of this event. So we had someone wanting a warm introduction to J.K. Rowling, the author of the Harry Potter books, and that was for a business, Little Scribe, which was promoting handwriting. It was such a diverse scope of entrepreneurs and startups that we had here. You and I were both there when we heard from Mr. Right Underwear, and that was all about the proper fit of underwear to promote health. It was all sorts. There was a lot going on.
Yeah, and I think interestingly, there was a lot of sort of high-tech stuff. There was also a business to help couples in their sexual relationship using, you know, a sort of mobile advisory business. And I thought another really interesting one was at the old age sort of side of things, in terms, again, communities, local communities being put in touch and giving histories of patients so that, you know, you don't get this constant churn of carers coming through that don't know anything about the patient.
Oh, I really love that. That one, Mabel, has actually made it through. So breaking news that I can reveal, there have been 8 businesses out of the 17. So a couple of them I'm surprised didn't make it. Our friends, the Love sexual relationship app didn't make it through, which is sad. We've got Generous and Grateful, which is linking women with white goods bedding to help them flee domestic abuse, and a really worthy charity. Tyken, now that one, I think you were there too, Ticky. They were talking about blockchain and using that for identification papers for the displaced, and with the refugee crisis, some of the applications for these are extraordinary.
Yeah, no, I thought it was a really, really interesting display, and of course it's going to go, the Prince is going all around Australia over the next, what, week?
Yeah, I think the next one is WA for Curtin University, checking in on the space program. So it's a real mixed bag, but he's really championing and elevating the startup industry across the country. And I know that that's been really appreciated by those pitching here tonight.
Camille Bianchi, thank you very much. Now, the Prime Minister is declaring the APEC summit a success, despite conflict between China and the US preventing consensus on a communique, despite being caught in the middle between Australia's largest trading partner, China, and longtime ally America. Mr Morrison is downplaying the division far for more. Let's bring in Tracy McNaughton, Head of Global Macro Strategy at Wilson's Advisory. Tracy, it's great to see you again.
You too,
and congratulations on your new role.
Thank you, thank you.
OK, so you're still over macro and trade.
Correct.
What do you make? What do you make of this APEC, well, falling out, if you like?
It was certainly a fiery encounter. Certainly not something that we're used to out of APEC.
And unusual not to have a communique.
That's right. There seems to be a lot of disagreement in terms of the wording in that communique, and in particular around the wording around the World Trade Organisation and reform there, and in terms of how the World Trade Organisation deals with unfair trade practices, which I think is what the Chinese were most concerned about.
And, well, when the Chinese joined the WTO, which was not such a long time ago...
2001, not so long ago.
Yeah,
yes.
And they joined as a developing nation, And now, as I understand it, America would like them no longer to have developing nation status.
Well, that's correct. They've stretched their leg, and I think the Americans would like that because they're getting, you know, favourable terms and conditions as a result of being a developing nation. And so I think, you know, what we're seeing here ultimately at the macro level is, for a long time we've just assumed that the world order is, you know, the US and then the rest.
Yes.
And now I think we're starting to see some disagreements as to the positioning in the world global economic
All right,
order.
so all this elephant bumping is going on at APEC, but the big trade war between, obviously, the US and China continues. People are optimistic about what might happen at the G20 in South America?
Well, I don't know if they're so optimistic now as a result of what's happened at APEC. I think the best that we could hope for, really, because, you know, President Xi Jinping and President Trump are due to meet on the sidelines in Buenos Aires. I think the best that we could hope for is a stay of execution from the lift in the tariff rate to 25% come 1st of January next year on that $250 billion worth of trade. I think that's the best, really. I think any hope of an agreement before then is a little bit unrealistic. I think there's too many differences to be worked out.
Do you have a view on sort of where we should sit on on China? And a lot of people at the moment talking about the slowing.
It's certainly, you know, this trade war is certainly having an impact now. We are seeing definite signs of slowdown in the Chinese economy. Retail sales have slowed down. Credit growth has slowed down quite significantly. Domestic growth has slowed down.
Enough to make a difference to us?
Well, I think it's certainly a risk, absolutely. I guess one of the offsetting things is the stimulus that the Chinese authorities throw at the economy, and they are throwing a lot of money at infrastructure, which ironically would help Australia because it's boosting iron ore prices. And so that temporarily will help Australia. But the rest of the region is slowing down. A lot of the manufacturing surveys now are suggesting contraction for places like Taiwan and Thailand and Malaysia, etc.
Yes.
So this trade war is starting to get very serious. It's starting to hit the hard data. And to be honest, I don't see an end to it anytime soon. And so, you know, we're likely to have to deal with this for a little while longer.
All right. Now, where do you sit on what Phil Lowe should be doing with interest rates? Because there's been growing calls from various economists that now, if now is not the time to raise rates, when is? We've got really pretty good growth. We've got record unemployment. Yes, we've got this sort of lagging wages growth issue, but surely is an opportunity now to put a bit of a buffer under rates, isn't it?
Well, I think, you know, unfortunately, the banks have already done the job for the Reserve Bank. We've had some quasi-interest rate increases already, and that is now starting to bite. So I actually don't think it's a good time now for the Reserve Bank to be raising interest rates.
So you're not in that camp? You're not in the sort of Warwick McKibben General Financial Review, I suppose?
No, certainly not. Our view is we're unchanged on official interest rates in Australia for at least well into the second half of 2019, if not beyond that, because I think the housing market has still got some cooling to do. We haven't really seen the end of that just yet.
Yes.
And that's now also starting to impact, you know, sentiment and consumer spending. So.
Yeah, and of course we've got the election, and the backdrop there is this big battle over negative gearing. Do you think that if negative gearing reform was put in, that it would have a huge impact on the property market, like the government suggests that it might?
I think it certainly will have an impact on the housing market, which is why it was reversed when it was attempted before. So I think that would be a very dangerous policy to introduce at this stage. And I think it's unlikely that they will do that, particularly given that the housing market is already starting to cool quite
Well, they seem to be pretty intent to do it. Chris Bowen, when I spoke to him last week, said, no, we're gung-ho on this.
Well, we've still got a long way to go, though, and particularly given the probable makeup of Parliament. Remember, you know, we haven't really had a lot of policy reform or policy changes because there's been you know, gridlock down in Canberra. So I don't see that changing anytime soon either.
Right. Well, looking forward to chatting it all through with you as we get closer. Tracy McNaughton, great to have you back. Thanks very much.
Ticky.
OK, well, after the break, shares slide for Medibank Private. We'll find out why next with Steve Johnson from Forager Funds.
This is Ticky on Your Money, covering the big business stories.
Welcome back. Medibank private shares sliding as the health insurer says it expects to lose a key contract supplying Australian defence personnel with healthcare services. Australia's Department of Defence today said Medibank wouldn't be chosen as preferred tenderer for the renewal of the Garrison Health Services contract. The contract delivered around $30 million operating profit in 2018 fiscal year. As a result, Medibank's current multi-year deal will expire mid-next year. Medibank shares were placed in a trading halt prior to management's update on that contract. Well, for more on that story and a few other things, Steve Johnson, CIO at Forager Funds, joins me live at the desk. Steve, these big contracts, I mean, they do make for a crucial part of the operating, don't they?
Probably more crucial than most people had realised, I think, Ticky. That's the issue today, is not so much that they've lost a contract, but that it was as profitable as it seems to have been. And it's not surprising. This is the sort of business where you're actually going to lose the most profitable ones because they go out to competitive tender and someone else is willing to bid a lower price. So I think it's not a huge deal in the size of this business and the magnitude, and the reaction from the market today was fairly meaningful relative to the size of the profitability. Yes. It's probably just got a lot of people asking more questions about, well, how many more of these contracts
exactly,
do you have?
And why did you lose it? I mean, what's it, you know, why would you lose a contract like that? You think it's a price?
Yeah, absolutely. And I think that's part of the reason of this business being floated on the stock exchange and the government making it private is to throw a lot of these services out there to a competitive market. The question for Medibank is how much of an impact is that going to have on its profitability? It's quite a profitable business relative to other players in the space, so there may be more in there that the competitors can cherry pick.
So there's that, and then there's the possibility of a Labor government and the impact on health insurance premiums.
Yeah, correct. It's actually been a pretty good environment for the health insurance players at the moment, though. We saw NIB and most of the private players coming out saying that claims inflation that's been killing them for some years now has really slowed down. They're putting a lot of pressure back onto the hospital operators and the like. So it'll be interesting once the government actually gets in. I mean, there's a lot of noise about it at the moment, but some of those issues have gone away, for now at least, in terms of rapidly rising health costs. All
right. I should briefly ask you about Myer.
I'm worried about it.
Are you?
I'm very worried about it. And for them to say that, you know, they're aware of their continuous disclosure obligations, I think when you're going through something like this, you don't need to promise the world, but you need to be more transparent than you normally are. And they've done away with quarterly sales updates, and this got leaked to the press, and they've come out now and said, well, it's not quite true, but it's sort of true. Our sales are down 5%. And in the retail world, down 5% is really problematic. Your costs are always going up. The rent's going up. Your staff costs are going up. You need sales growth to be viable. And I think this whole argument about, well, we don't want to be doing unprofitable sales anymore, I've never seen a retailer put their prices up to get themselves out of trouble. You need to be competitive with where the market is. And it worries me.
All right, well, we will talk about a bit more about that with Eli coming forward. But give us some good news. Baby bunting.
Yeah, at the other end of the spectrum, it's a bit doom and gloom out there in retail at the moment, and I think baby bunting's a really good example of some specialist retailers with the right format that are able to make it work. They went through their own issues probably 12 to 18 months ago. A few competitors went bust. There was a lot of liquidating of that stock. But you're now seeing them post some pretty healthy same-store sales growth in their business, and they're still opening a few new stores as well.
And it's a bit like a category killer, if you like, baby bunting, isn't it? I mean, if you think of Smiggle and John Alexander that Premier Investment has, those are the ones that seem to be, provided you can get the right category, seem to be doing all right.
Yeah, I mean, a lot of people have been historically worried, and still are worried, I think, about online in this space, because you'd think it lends itself pretty well to an Amazon delivering these types of services. And it hasn't worked particularly well as a category killer in the UK or in other markets where we normally see those things. So there's scepticism about it, but they're certainly delivering some good results at the moment, which I think is good. And I think it shows that whole retail space, I think if you can find the right concept in it and a well-executed business model, there are still opportunities there.
Well, now what's happening with Viva?
It's a new float, and they're claiming that their petrol margins are getting crunched, or refining margins is actually a better way of putting it. They import oil and they refine it down in Victoria, and globally at the moment that market's a bit difficult. They compete against a lot of Singaporean refiners and the like. It's coincidentally timed float where the margins were nice and high.
Including Caltex, you'd think, wouldn't you?
Well, Caltex doesn't do much refining anymore. They've shut most of their
a little bit, but they're more and more controlling with their great trading Singapore hub up there.
Yeah, that's right. I would think they're able to pass through that cost more, though. I mean, they're not having a great time of it, but the magnitude is much bigger if you're an actual proper big refiner. And well, I think for all the criticism of Caltex's downgrades in recent weeks, I think that strategic move to not be refining here in Australia, you can have all of the arguments about national security and things. I think from a business perspective, these big modern refineries up in Singapore are very, very difficult to compete with.
All right. I should also ask you about the Fairfax 9 merger, which actually did go through today, notwithstanding the best efforts of the cat, Anthony Catalano. He was sort of putting in, trying to stop it.
Some strange stories this morning about a last-minute desire. I don't know why anyone...
Was it like going to take a 20% stake or something?
Yeah, and why would you... I mean, if you're trying to do any sort of strategic transaction, the last thing you want is a 20% shareholder who can stop you from doing that. So it wasn't a takeover bid, but it was I'll buy 20... It was weird. It was very strange, and all of the proxy votes from fund managers like us were in days ago. You have to get your votes in 2 or 3 days before the meeting anyway. So the chances of that changing anything, I think, were pretty slim, and I think there's a lot of strategic merit to this piece of consolidation in the media space, and more of it. I think...
You see more coming?
Yep. You're going to need to own newspapers, radio, TV stations and share your resources across, because the revenue number at the top line is shrinking, and it's going to keep shrinking as more of those dollars go online. So I think it's the right strategic move, and you're going to see more of it.
Steve Johnson, great to talk. Thanks so much.
Thanks, Dee.
OK, well, one stock, as we were saying, that is really struggling is Myer. That's thanks to a leak in the AFR's rear window the other day on some pretty depressing sales numbers, including the online sales. The retailer was put into a trading halt last week, which then was voluntarily extended by the company. Myer is back trading, but shares are off. Golly, I'll check in a minute, but I think it was about another 6% in the lead up to the company's AGM. Now, shareholder Solomon Lew, as ever, is heckling with messages to shareholders to turf out the board. Myer's come back with its own message to shareholders. Joining me now is Eli Greenblatt, the Australian's chief business reporter in Melbourne. Eli, help bring us up to date. How do you think these two opposing letters are going down with shareholders at the moment?
Well, shareholders will be quite bemused and maybe befuddled or disappointed as these two kind of trade blows and accusations and call each other bad names in front of everyone, as the shares dropped about 17% this morning when Myer came out of that trading halt. It's been kind of punching counterpunch, and then about 2 hours after Gary Hounsell or Myer put out this letter that Gary Hounsell is sending to shareholders, Solly Lew's team responded with their own letter, which was just as bitter and angry and making more accusations. So with this Myer battle, just when you think you've seen, you know, the most it can get in terms of bitterness and anger, it ratchets it up a notch, and it's going to make for a real kind of ding-dong battle at the Myer AGM next week when the two forces meet in the Myer Mural Hall for maybe we can call it the brawl in the hall.
Oh, God. Now I mentioned that Myer letter. Perhaps we should quote from it. I mean, one of the quotes there. Sadly, at this critical trading period, this hostile campaign impacts negatively on customers, team members, and ultimately on you, our shareholders. Premier Investments should be ashamed of this, they say.
Yes, and this is a similar accusation that they used last year, actually, before the last AGM, and it's part of, I suppose, a kind of a list of accusations that Myer and Gary Hounsell have made against Lew and Premier, that they're hurting customers, they're hurting Myer staff, they're going to hurt the sales with all this. And then also on top of that, there's a huge conflict of interest in that Solly Lew's Premier obviously is the biggest shareholder in Myer, but Premier Investments, its retail businesses compete with Myer, and on top of that, Solly Lew's private businesses supply to Myer. So there's a whole kind of web of conflicts there. Solly Lew, 2 hours after that meeting hit back, 2 hours after that letter, hit back with some even more kind of interesting and colourful language, where he said that Gary Hounsell shouldn't blame other people, that in fact Gary Hounsell and Myer should go into the Hall of Mirrors and have a look around and look in the mirror to see who to blame. Solly Lew then said that it's their own fault, they shouldn't be blaming shareholders, and that this kind of reeked of desperation as Myer directors were scared that their time in the trough was about to come to an end. So, you know, even more colourful language from Solly Lou and from Premier. It's classic Lou, really. And, you know, what's going to be interesting is that, Ticky, next Thursday is the Premier Investments AGM.
Yes.
And on the Friday, one day later, is the Myer AGM.
Right, and what do you make of this ding-dong over the online sales? The AFR was alleging that the online sales had fallen drastically, and that the Myer figures are actually that it's slightly increased, but Myer seemed to be including if you go in there, pay physically, but you do it on an iPad, that's an online sale. Well, if that's true, that's rubbish, isn't it?
It sounds like it, but that's always the problem. Where do you draw the line of an online sale? Yes, if you go into the store, but then someone helps you with an iPad to make an order, is that online? It is booked online. If you're at home and it's click and collect, so you collect it at the store, and then you buy something else while you're there, is that considered online? Is that in a real store? I think the bigger problem is as you step back from this, the real problem is that online for Myer was always the shining light, was always the big hope. That yes, while sales overall were declining, that sales online were booming. It now seems that sales online maybe aren't booming, that in fact maybe sales from online are cannibalising the bricks and mortar sales, and that's the real issue. So, online was their best category in terms of sales channel. Now it's looking pretty bad and looking pretty
So Eli, to sum up though, what are we thinking is going to happen at the Myer AGM? Is there going to be a board spill? What do you reckon is going to happen?
Yeah. Well, I think key to this will be what Jeff Wilson at Wilson Asset Management does and what Anton Tagliaferro does at Investors Mutual. Will they support Solly Lou? It seems unlikely, so it's going to be up to the smaller shareholders. Will they support Lou and get that second strike? And then once the second strike is on, then you can do the spill motion. But I'm just not sure if Lou has that support yet for the second strike or for the spill, especially with Jeff Wilson and Anton Tagliaferro saying they're willing to give the new Myer CEO, John King, a lot more time. So I think there'll be a lot of noise, a lot of bluster, a lot of angry words at the AGM. I'd certainly advise anyone who's not a shareholder to turn up and, you know, as a visitor and have a look, because it's going to be a great battle. One of the great battles of corporate Australia right now is on. So I would say turn up, especially if Lou turns up in the audience. I think it's just going to be fascinating to watch.
Yeah, Eli Greenblatt, we will follow it. Thank you very much for bringing us all up to date.
Thanks.
After the break, an Israeli company with a breakthrough in facial recognition technology. More on that next.
Now, back to Ticky.
Welcome back. We're switching to tech now, and an example of Israeli innovation yet again leading the way. OrCam is currently pioneering wearable technology that assists the blind. OrCam was founded in 2010 by the creators of Mobileye, a vision safety company that was acquired by Intel only last year. The MyEye product is a breakthrough device designed to assist vision impaired with reading and facial recognition. It's a tiny camera attached to a pair of glasses that reads and announces text and recognises people, money and other objects. Well, for more, Your Money Chief Business Reporter Leo Shanahan spoke with OrCam's Leon Paull a little earlier.
Leon Paull, thanks so much for joining us.
Thank you for having me.
Now, look, I came into contact with OrCam when I was last in Israel, but perhaps tell people what is this product and how it works.
Well, OrCam MyEye is a smart wearable camera, which is powered by artificial intelligence and computer vision, which enables people with visual impairments or reading disability to access the world around them. So it can help them read text, recognize people, products, banknotes, and many other things around them, and lead a more independent life.
So I was interested in this company because it's founded in Israel, but what's its international footprint like, especially in Australia? I understand you've got a bit of a presence here now.
Yeah, absolutely. Well, we were founded back in 2010, and we've been developing the product since then with a lot of investment behind it. The product is now available across 28 countries worldwide. We first of all launched it in its English version in the US, UK, and also in Australia. That was about 3 years ago. And since then, we've added on additional languages that enable us to sell basically across the world today.
What's the uptake been like in the English-speaking world, or indeed globally outside of Israel?
Well, it's been amazing because this is really unique technology. This is bringing the cutting-edge, sophisticated artificial intelligence technology to a segment of the population that don't typically have access to the highest tech. These are people with a disability, people with a visual impairment. So the uptake has been absolutely amazing, and we have already tens of thousands of people using OrCam My Eye around the world. Here in Australia, we started about 3 years ago, and there are hundreds of people with visual impairments who already have the device and are using it on a daily basis.
So I was interested in this company as well because it kind of reminded me a bit of an Australian company that's done particularly well in hearing aids. And two problems they come across is both IP and price point. And that is, you know, there's this problem both globally in maintaining their intellectual property, but also making, Cochlear is the company I'm talking about, making this a competitive product for people outside of, I suppose, necessarily first world countries.
Yeah, well, certainly a price is certainly an important point here, because this is a product which costs about 7,000 Australian dollars, which is a similar level to mid-range, a couple of mid-range hearing aids. So, but that is a lot of money for a lot of people to fork out. But this is where funding mechanisms come into play. And here in Australia, for example, the NDIS is such a mechanism that can fund a product like OrCam for people who are eligible for it.
And what of intellectual property? How do you defend your IP in such a global environment, especially with, frankly, countries like China, who are well known for copying IP?
Well, obviously, we've got plenty of patents and trademarks protected as best as we can. But I think it's really about staying ahead of the market and really being on the cutting edge of technology. And at OrCam, we have a very, very large body of research and development personnel who are constantly developing new capabilities, new functions into this device. So really staying ahead of the game. There will always be competition, but I think we're pretty unique in the marketplace, and we're able to maintain that edge for the foreseeable future through the level of investment and work that's going into this product.
And what is the company structure? Any plans for an IPO or anything like that?
Yeah, well, I think our CEO has said publicly that that the company will eventually go public. At the moment, we're very focused on developing the penetration of OrCam in each of the markets in which we're active. So here in Australia, that means reaching out to more and more people who are visually impaired or suffer from low vision or have a reading impairment like dyslexia, in order to grow our client base across the market.
And just generally, what do you think it is? Obviously, it's one of the big business stories of the world is Israeli tech companies and their ongoing success. What do you think that it is about Israeli tech that drives this level of success globally?
Well, I think that the concentration of talent that exists in Israel for high tech is really one of the driving forces behind this. As you probably know, and as you saw in Israel, there is a very, very high concentration of Israeli startup technology companies who are really breaking a lot of ground in new areas of technology. And OrCam is definitely one of those, and we're really happy with what we're doing in the segment of computer vision and artificial intelligence. So I think we really do have a unique advantage. Maybe it's down to Israeli innovativeness and creativity, but there's something in the air that is driving the innovation.
Now let's get a quick demonstration of the product itself. Sure. It's quite fascinating to see it in action. Maybe pass me that newspaper there. We've got today's front page of the Australian business section here. We've got well, city apartment sales falling flat is a predictably Sydney or Australian headline. Let's see what the product does with that kind of headline.
Right, well, this is the OrCam My Eye, and I just put it onto any pair of glasses and wear it just as I would any other pair of glasses. And the camera in OrCam My Eye is seeing what's in front of me. So all I need to do is just hold up this newspaper in front of me and just face it and point towards what I want it to read.
Commercial property.
And it read the headline commercial property, and I can point a little bit further down to this article.
Mr. Rothwell said instantly the 46 sales during the...
It's reading the article across here.
Fantastic.
Okay. And in order to stop it, I can just stop it with a gesture. So it's recognizing simple human gestures like pointing and stop, and reading the text that it sees in front of it.
OrCam's Leon Paull there talking to Leo Shanahan. Well, that's all for tonight. Tomorrow night, Dave Sharma, chairman of Shekel Brainway and former Liberal candidate for Wentworth. See you tomorrow night at 5:30 p.m. on free-to-air Channel 95 or tonight on Catch Up at 8 p.m. on Foxtel's Channel 604. Thanks for your company.